The best SPACs to watch in 2021. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact, baby. And today, we're going to speak about some SPACs. So without a doubt, 2020 has been the year of a SPAC. I mean, it's what we've spoke about an awful lot on this channel. We've made an awful lot of money on a lot of SPACs, and so it goes without saying that a lot of people are looking towards what to buy next, what to buy going into 2021. So I already made a video like this for the best EV stocks to watch going into 2021. I'm going to have one for growth stocks and penny stocks as well. It's going to be juicy, but SPACs are a little bit weird, yeah, because that's not the actual stock. So it's hard to make a video like this for 2021 because, you know, in a matter of a couple of months, some of these may no longer be SPACs. So we don't have as many companies to choose from, but today I am coming to you with 4 SPACs that I want to speak about. Now this year we've seen some great success with SPACs. I'm up over 200% in SPE, who's going to be merging with Chargepoint. I'm up over 140% in CIIC, who'll be merging with Arrival. I'm up over 60% in Desktop Metals, who now are a publicly traded company. And I know a lot of people have made a lot of money in SPACs. It's been juicy. But yeah, we got 4 juicy ones to speak about. So right before we get into the first one of today, can I please ask you, my friend, to hit that juicy like button? I really would appreciate it. It'd be like a Christmas present to me. Drop me a comment down below. I'm interested. What SPAC did you make the most money off this year? And please, my friend, if you are indeed new around here, hit that juicy red subscribe button. Join the family of investors. We're trying to get to 65,000. We're nearly there. I would really appreciate that help. If you are interested in joining my private Discord group, in there you will get access to every time I buy or sell a stock. You get pretty much daily messages from me speaking about the market, what I'm looking at, or what videos I'm making, just little nuggets of info. There's also over 600 investors in there. It's an awesome community, so much value. Hit that first link. If you just want 4 free stocks, hit the second link in the description, sign up to Webull, deposit $100. 2 of those are valued up to $3,700. That is an insane amount of money, my friends. So anyway, we're going to kick it off with the first SPAC of today. A lot of you guys will be aware of these guys. I am in them myself. It is BFT. So BFT is going to be merging with a company called Paysafe. And for the record, I do have a full video on this company if you want to check it out after this one. So Paysafe is an integrated payments platform focused on connecting businesses and customers. A lot of people are comparing them to PayPal or to Square, but they're in that space anyway. The pro forma enterprise value is $9 billion at closing, and the merger will result in Paysafe gaining $150 million in cash, you know, to fund on whatever they want. It also includes $2 billion in funding from various private investors, and this is set to close during the first quarter of 2021. And this is a Bill Foley SPAC. If you're not aware of who Bill Foley is, do some research into him. A lot of people have a lot of respect for this man, myself included, and him being on the team is very important. So these guys are a leading global pioneer in digital commerce, okay? They have a highly differentiated B2B and B2C global network with a powerful suite of digital wallet, e-cash and integrated processing solutions. Significant growth opportunities, very significant growth opportunities. That's generally what we're looking for with SPACs. Long history as the global market leader in iGaming payments, which is a hugely growing market. It's not their biggest segment yet, but I do think it has a lot of potential. They have proprietary and scalable platform in technology and risk management, driving a proven M&A playbook, and they have strategy going forwards. Looking at over $100 billion of total volume 2021 estimates. Huge amounts of volumes happening. A lot of the time when a SPAC, you know, brings a company public, they're a startup. Paysafe is not a startup by any means whatsoever. $1.5 billion in organic revenue 2021. Remember, we currently have a $9 billion or so valuation. 11% organic revenue compound annual growth rate from 2020 to 2023. That's a nice rate of growth. I know a lot of the time people are used to looking at all these EV stocks and EV SPACs and they have these disgusting CAGRs, but this is a really nice growth rate. 17% organic adjusted EBITDA growth rate over the same period of time, and 30% organic adjusted EBITDA 21 estimated margin. So they're the number 1 iGaming e-cash network. They work with Twitch, Fortnite, Spotify. The number 2 global stored value digital wallet. Think Bet365, DraftKings, one of the most successful SPACs this year, and the number 4 independent merchant acquirer in the US. Now, I do still think that this company has some to prove, but I do think they're going to prove it, and that's why I am an investor. Now, I didn't get in particularly early. I think I'm only up about 15% or so in this company, so it's nothing crazy by any means, but I do have high hopes for this company, and I want to say that I see them as a long-term investment. I don't see them as a swing trade. I don't see them as a day trade or anything of the sorts. They already have an established customer base. They are working with some absolutely massive names. They handle a whole lot of transactions. We have a decent valuation. I think these guys are going to do very well over the next literally 3 to 6 months, but more importantly 3 to 5 years down the line. Okay, now we have a company called Arrival, ticker symbol CIIC. This is going to be up a lot of your guys' streets because it is an EV stock. So I actually was one of the people who bought in here when we were at $13 a share. So I'm up very nicely, but I don't have a full position built yet, okay? I still would like to buy some more shares. You can see the price action's been pretty crazy, okay? We shot up to about $16.50 or so the day after I bought them. We then proceeded to go on an insane run. Initially, we actually went to right about where we are now, $33.30 a share. Later on, we went on to hit all-time highs of over $37 a share. Now, there is one quite clear, somewhat worrying thing. If I put on the after hours chart, there has been a gap created somewhere around the realms of $22.50 up to $23.20. Now, does it have to get filled in? No, gaps don't have to get filled in, but it is still a relatively scary point of interest. And this has been an extremely volatile company thus far, okay? So, my plan with these guys is simple. It's to dollar cost average, starting relatively soon. I've seen how quickly they can go up and I've seen how quickly they can come down. Now I just want to take advantage of any significant dips going forwards. I actually interviewed somebody from the team. If you want to watch that video, get a whole lot of juicy information on these guys, you can do that after this video. But trust me, a lot of information came out of that one. But there's also a few things to understand about this company right off the bat. We have a pro forma enterprise value of about $5.4 billion. That is only 0.4 times based on our 2024 estimate revenues. I do believe those estimates are a bit high, but you know, I'm not the professionals, I'm not the one sitting on the team. I still do think, as of right now, we're at a nice valuation. We have a 10,000 unit order from the UPS with the potential for another 10,000. So we already have one absolutely huge contract lined up, and we do know for a fact, you know, they're speaking with other people as well. Lots of other people. Now, the thing is, guys, okay, the project pipeline. An electric bus started production the very end of next year, okay? Then we get onto their electric van. That's Q3 2022. So these guys have a lot, and I mean a lot of long-term prospects, but we're not going to be seeing delivery numbers, etc. until the end of next year. So yes, it should go without saying these are a long-term hold to me, and I do expect some short-term volatility. I mean, you can see just yesterday alone, we went up over 14%, guys. That's not normal. Now, one thing I love about this company is this: the micro factories. You know, Tesla's gigafactories, they're huge. They produce hundreds and thousands of vehicles. These guys have micro factories. They're a lot cheaper to build, they go up a lot faster, you can have them in a lot more locations. They obviously don't have the same production capacities, but from an efficiency point of view, to get yourself started, these are incredible. So a micro factory, they can produce 10,000 vans a year, or else I believe it's 1,000 buses. So it's not the biggest production capacities in the world, but you can just put up more and more of them, and you can bring them to where the demand is, and that again can lower operating expenditure down the line. And I mean, it's an EV stock. 2020 has been the year of the SPACs and the year of EV, and I think 2021 is only going to be bigger for both of those, you know, industries. So this one definitely has to make the list. Okay, guys, Chargepoint, we have to speak about them. So I was one of the people who was buying in somewhere around here. I think I have a 14 something cost basis. I'm up over 200% in the company as of right now. It's been my best SPAC this year. They're in the charging game. They are extremely prominent. Just yesterday we made new all-time highs again. We went up over 15%. These EV SPACs are crazy. But again, I expect next year to be such, and I mean such, a good year for EV stocks. And for charging stocks, potentially even more so than a lot of the smaller EV plays. Even at current prices, I think they have huge potential. Now, what I will say is, we look a little bit overbought. We have been swinging a lot. Look, I mean, we went from, let's say, $15. We went all the way up to the 35s. We came all the way back down to 25, all the way back up to 45. It's been crazy. It's been absolutely crazy. Would not surprise me in the slightest if these guys come back into the low 30s or even a little bit lower. I think that's something people have to understand with these SPACs. At the same time, it's not a guarantee. I mean, I know a lot of people who were selling when we were at 20s or when we were even at the 22s, 23s because it was such a big run up, and it's gone up another 100% since there. So yet again, my friends, to me, it's a long-term investment. That's what Chargepoint is. I'm investing in the company. I'm not investing in Switchback Energy. I'm not investing in the SPAC. I'm investing in the company. I'm investing in the industry, in the growth that I see happening. So these guys are, simply put, in electric chargers. So they're one of the guys who are going to benefit from the EV boom regardless. We have strong competitive moats, which is really important because there are more competitors here. I mean, look at Blink. They've done incredibly well as well, but significant level of capital raised to date. has powered differentiation, okay, our R&D and go-to-market engine. We have a large amount of customers, okay. Revenue grew 60% year over year in 2019 and has projected a 60% compound annual growth rate, 60% from 2021 to 2026. That is insane. That is huge. And you can see Chargepoint growth directly proportional to EV penetration. It's more than likely going to be incredible. So I have had a lot of conviction on these guys even when they were back in the 14s and 15s. I still have a lot of conviction on them now. I wouldn't be too excited buying at these prices in all honesty, but again, I do think this is one where dollar cost averaging may not be the worst idea in the world. But you can see we have some quite clear support drawn out right around here, right about where we are right now, around the $45 mark. And there's no extraordinarily clear support. Now we can see some trends, we could draw out some trend lines. I don't even think we need to right now. Just follow it closely. I wouldn't be going all in is all I'm trying to say with these guys, but I do think next year is going to be incredible. But again, the next 4 to 5 years are going to be even better. Okay, and this is the last one I'm going to speak about. And I understand a lot of people are not going to agree with me on this one. It's actually VGAC. Now, I opened a position in these guys. I'm up about 10%. The reason a lot of people won't agree with me, okay, is because we do not have a merger target yet. We do not know what company we are investing in. Right now, we are primarily investing in potential. We are putting a lot of trust into this man right here, Richard Branson. What we do know, okay, is the SPAC will focus on finding businesses from Virgin Group's core sectors: travel, leisure, financial services, health, technology, and renewable energy. And pretty much what everybody's hoping for is either technology or renewable energy. A lot of people are hoping that it's going to be with Virgin Hyperloop. And by the way, there isn't any rulings. If you read the SEC filings, there's nothing that says they cannot merge with a Virgin Group company. So it is potentially, could be Virgin Hyperloop. But again, there's no guarantee. It could be anybody. It could end up being some financial sector and it goes down to $10 and we lose a little bit of money. So I don't have too much to say on this one just yet. But I do believe in Richard Branson, okay? He's done some incredible things in the past. They've raised enough money where they could be going after a quite considerably sized company. And I mean, if you look at what Richard Branson does, the large majority of it's innovative. I mean, look at Virgin Galactic. Look at Hyperloop. A lot of us believe that this one is going to be exciting. Now, I did buy in, I think it was at about 1060 or so. So I do have very minimal downside. Right now we're at about 1190. You know, you're risking a couple of dollars per share. This isn't one I'd be betting the house on, at least until we know who the merger is going to be happening with. This one is much more speculative, but the reason I'm putting it on today's list is because I genuinely think this could be one of the biggest opportunities going into 2021. Right now you have to take a bit of an extra risk to get in at a cheap price because we don't know who it's going to be with, but there is controlled downside. There is minimal downside. If you are to sell out, you know, if it becomes a company you don't want to invest in, you'll be able to sell out at least $10 a share. At least it's controlled. But anyway, my friends, they are the companies I want to speak about today. They are 4 SPACs to watch in 2021. I know there's loads more out there. I obviously can't include them all, and a lot of the SPACs I did invest in this year have already gone public. Lordstown Motors, Desktop Metals, I'm sure there's more in there as well. We have seen a lot of success from our picks this year though. But anyway guys, if you watched this video all the way till the end, you my friend are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me. If you enjoyed the video, took some value, some insight, could I please ask you to hit that like button, my friend, maybe drop me a comment down below. And you know, subscribe if you're new around here, why not? Again, we're trying to get to 65k. If you are interested in joining that private Discord group, it's the first link in the description, my friend. Well, why not? And if you do want those 4 free stocks, if you want to make some free money, you just gotta hit the second link in the description, sign up to Webull, deposit $100, bada boom, easy money. Anyway, my friends, I hope you all have an absolutely beautiful, blessed day. I hope you're all looking forward to the holidays. I'll see you for another video very soon. Peace.